everyone. A very warm welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi.
Hi there, everyone. I'm Avan Dabash. Let's tell you what's lined up today on the show. Well, we've got some viewer queries. We've got a question coming in on Camlin Fine as well as Just Dial.
And in our portfolio segment, we'll be discussing Radhakrishna SS portfolio on the show.
Well, time to bring on board our experts then. G Chokkalingam, founder, Equinomics Research and Advisory, with us on the fundamentals, and on the technical side, Swati Hotkar, Technical Research Analyst at Nirmal Bang. Welcome to the show. First up, a live caller. We've got Kundan joining in from Mumbai with a question on Camlin Fine. Hi there, Kundan. What's your query for us?
Hi, I'm Kundan from Mumbai. My query is regarding Camlin Fine Sciences. The buy price is at 96 and I have 100 shares of it. The time horizon is 2 to 3 years. Should I hold or sell it?
Okay, 96 rupees is the buy price and it's close to 100 shares. Let's get in a view as to what exactly should be the outlook. Camlin Fine, we don't track that one too often, but Mr. Chokkalingam, take us through what you make of the prospects. How have the fundamentals been? Do you think that our investor here should continue to keep his money in?
Yeah, certainly. And this company had, unfortunately, quite bad 2 quarters, especially the last quarter, they couldn't do well. But company belongs to good management and a strong balance sheet. It's into specialty chemical, and they have successfully turned around the acquisition they made in Europe in the recent past. Based on the the recent past achievement of the management, I'm pretty confident that they would overcome the difficulties they are going through. The stock also already corrected, pricing in the poor performance. So therefore, I would suggest to hold with a minimum target price of 100 rupees in the short term itself.
All right, a whole call coming in on Camlin Fine Sciences. And as you can see, the stock has really not been performing very well since the last couple of months. In fact, just in the last 1 month itself, it has lost close to about 9%. And this week itself, the stock has lost about 3.4%. Swati, do you think that this correction does provide an opportunity to buy in?
Yeah, from the last few days or say from the last few months, we have seen that the stock is in a correction mode. It just got stuck up within a range bound of a 80 to 100 odd level. Since he is having a buying at a very high rate of 96 odd levels, the stock will find the support at nearly 78 to 80 rupees. At that range, in that we will find some support level. So I will suggest to decline, to just average it out, where if the stock is coming down to 78 odd levels, you can average it out so that the buying rate will come down. And again, if it's going upwards, we are finding once we find the support at 7800 odd levels, the stock will again find some reversals from that support level back towards 9500 odd levels. At that point of time, he can just book the profits. But at the current level, just hold on. But on a dips, definitely one should take a average position. So in order to just keep their buying rate on the low side as such. When we move about the 9600 odd levels upside, I believe it has the potential to reach up to 110, 120 for a 2 to 3 years horizon period.
Okay, that's the view coming in on the technicals as well as on the fundamentals as to what exactly you should do. I hope you took note of all of the levels that our experts have mentioned. Next up, we've got a caller from Pune. Sandeep is joining in and he's got a question on Just Dial. Thanks very much for being with us on Buy Now, Sell Now. Sandeep, tell us how we can help you and what's your question?
मैंने जस्ट डायल के शेयर्स बाय किए हैं 100 क्वांटिटी एट द रेट 482 में, तो इसका फ्यूचर क्या रहेगा? अभी होल्ड करके रखूँ या सेल कर दूँ?
Okay, that's the question coming in from Sandeep. Let's help him out. Just give you a quick glimpse of the kind of fundamentals and the kind of results that you've seen for Just Dial. It was a decent quarter. Profit growth was up by just about 8%. Revenues came in at 176 crores versus 166 crore rupees, but a little bit disappointing on the operational performance for Just Dial. The EBITDA came in at almost 30 crores. That's down 35% on year, and margins therefore contracted to about 16.6%. The higher other income was the only reason that you saw a bump up in the PAT this time around. They saw 16.6 million listings versus about 15.5 in the first quarter. So that's up about 8%. And remember, the company has about 32 Search Plus services, which is live on the platform. Let's tell you what brokerages as well think. Deutsche Bank believes that there will be continued improvement in the operating metrics, and JD Omni will contribute about 3 to 8% of the revenues over FY17 to 19. There is the potential, according to Deutsche Bank, to deliver earnings CAGR of 59% over FY17 to 19. Mr. Chokkalingam, in light of the kind of positive views that we've seen, Do you think that our investor here should continue to leave his money in Just Dial? What kind of call do you have at the level of about 479?
I have a strong doubt whether fundamentally the stock can create any wealth from this level. You can consider, exiting the stock if it moves close to 500 level. There are reasons are two. One, it has lost the kind of growth momentum it had before listing or just after listing. Just after listing also it had a very small base. Now the revenue base has come to 700 crore. The kind of growth we are seeing on top line, bottom line, they are not comparable what it used to be in the past. And secondly, after seeing yesterday's Reliance Industries, the second wave of revolution in the telecom, I am of the firm view that all those service providers who provide services through telecom or electronic mode, they have to go for a massive cut in the the prices of their services. So that would be applicable to Just Dial also in the long term. So therefore, I would suggest sell if it improves even marginally close to 500 level.
All right, a sell call coming in from Mr. Chokkalingam. He believes that a 500 odd level, if that level is touched by Just Dial, you may actually sell off this stock. But let's get in a check on the technicals of this one and see how this one has performed since the last couple of sessions. Remember that Just Dial is one that has disappointed when it comes to Q1 results. And ever since then, even after that, the stock has underperformed the markets, because just in the last week, we have lost about 4% for Just Dial. So, Swati, what do you make of Just Dial?
Yeah, exactly. There is nothing much attractive on the technical pattern as such regarding the Just Dial stock as of now. We are seeing that the stock is currently trading in a downward channel. It is trading in the formation of a low top, slow bottom, indicates that the stock is just facing the weaknesses on every rise as such. So there is not much potential on the upside as such. But at the current level, I will not suggest to exit at the current level as well. But one should definitely maintain the stop loss of a 455 on a downside. If it's getting just triggered it out, then just exit from this particular counter. But on every rise, it's definitely a sell call from the technical side also.
That's the call coming in. Stay invested on the technical side with a stop loss at about 455. Mr. Chokkalingam wasn't all that convinced on the fundamentals, a call that you need to take. Well, we'll take a quick break right here on the show. Stay with us. On the other side, Radhakrishna's portfolio. That's what we'll be discussing in our Portfolio Advisor segment.
Welcome back. Thanks for staying on with us on BNS and the Weekend Edition.
Well, time to get straight to our Portfolio Advisor segment, and let's tell you a little bit about the person who sent it in. Well, Mr. T. Radhakrishna, he's 67 years old, lives in Bangalore, got 12 stocks, he's retired, and it's a long-term time horizon of the next 3 to 5 years. So let's tell him what exactly he should be doing. First up, which are the stocks that he holds? Well, let's get a glimpse. Advanced Enzymes, 32 shares bought at 896. Ajanta Pharma, he's got 60 shares at 1361 rupees. Alkem Labs, 22 shares, 1,376 is his buy price. Well, let's move right on. So far, so good. Amara Raja features on the list. 914 is the buy point. He's got 140 shares of Apollo Hospitals at 1,413 rupees. Apollo Tyres as well, 150 shares at 174. Moving on then from the large cap space, Asian Paints at 834 rupees is where he's purchased it. There's Aurobindo Pharma, he's got 600 shares at 673, 75 shares or so of Axis Bank, 520 is the buy point. Bata India also features on the list, 10 shares and he's bought it at 440 rupees. BEML from the PSU lot, 22 shares at 1,022, and finally BEL at 1,087. So let's get in a call as to how we can help him. Quite a bit of diversification, Mr. Chokkalingam, with large caps, mid caps. Of course, there is quite a bit of concentration in the pharma space as well. But tell us what you do with the first three stocks. That's Advanced Enzymes, Ajanta Pharma, as well as Alkem Laboratories.
Yeah, as you mentioned, quite safe stock he has. However, he holds about 5 pharma and healthcare stocks out of 12 stocks. So that approach is not advisable. If there is any stress for the sector, then the whole portfolio can go through a lot of stress. Coming to individual stocks, I would suggest sell on Advanced Enzyme. It's now trading at around 38 P on 1 year forward earning. We already seen, Lupin and Sun Pharma, which used to enjoy phenomenal PE. When there was a small stress, they fell a lot. So that is the kind of risk he is taking by holding this stock. Similarly, Ajanta Pharma also, I would suggest him sell. And from advanced enzyme, he can put that money in the LG Balakrishna brothers. He can also diversify this portfolio into, some automobile component stock. LG Balakrishna brother is one of the quality player in auto component, strong balance sheet, and they make transmission products, and it's available in single digit PE on 1 year forward earning. Similarly, money from Ajanta Pharma, he can put it in Lupin. While Lupin is trading at around 20 PE, Ajanta Pharma is trading at around 30 PE on 1 year forward earning. As far as Alkem is concerned, he can hold on to it. Among all the stocks he holds within the pharma space, this is one of the cheaply valued. So therefore, I would suggest a hold on Alkem Labs.
Recommendations coming in. You can buy an LG Balakrishnan and a Lupin instead of Advanced Enzymes as well as Ajanta Pharma, but you can hold on to Alkem Labs. Hope you've taken note of those recommendations. But let's get in a check on the next 3 stocks in your portfolio. It's Amara Raja Batteries, which he's purchased at about a price of 914 rupees. Apollo Hospitals at 1,413 rupees. And lastly, it's Apollo Tires, which he's purchased at 174 rupees. At this point of time, he's making some money on Amara Raja and Apollo Tires. More about Apollo Hospitals is more or less, flattish over there. But Mr. Chokkalingam, coming on these 3 stocks?
Yeah, I would suggest sell on Amara Raja. It's trading at a 24 P on 1 year forward earning. The stock also moved up a lot in the last 2 years. I would suggest him to shift to MRF, which is trading less than 10 PE. Despite a run up on Friday, still it is trading marginally less than 10 PE, a market leader in the tire space. In fact, I would suggest even hold on Apollo Tire. Last few weeks, what has happened, natural rubber prices have crashed by 17,000 rupees per ton. And side by side, even the oil prices have fallen. After touching $52, they have come below $46 oil, Brent oil. Both are positive for tire companies. So there is further upside for both tire companies, Apollo Tire and MRF. As far as Apollo Hospital is concerned, as I mentioned earlier, he has got too much of concentration in pharma and healthcare. So therefore, I would suggest a sell, and he can add a IT company, which is Emphasis. I am suggesting here. Emphasis is again attractively valued. Recently, the private equity investors have taken over the company. The core objective of the private equity investors, as compared to the entrepreneur, is to create value in the short to medium term and again unlock money for themselves along with the public shareholder. The company also got a lot of cash. The cash itself is around 140 rupees per share. Now the company is yet to declare the dividend for FY16, and I am expecting a good dividend because the cash pile is so huge. So therefore, I would suggest selling Apollo Hospital and buying Emphasis.
Okay, that's the view coming in on the next few stocks. Quite a few chops and changes that have been made. Let's get in some recommendations then on the next set of stocks. Asian Paints, and how do you think this large cap is doing so far? Do you think you should continue to stay invested? Aurobindo Pharma, given all of the news that we've seen in the pharmaceutical space, and Axis Bank, that's a good name to depend on. What's your call?
I would suggest sell on Asian Paints. It's a great company, no doubt about it. A leader in the paint industry. It's trading at around 45 PE. With a revenue of less than 17,000 crore, it is enjoying a market cap of 1,10,000 crore. So I'm a bit, concerned about the kind of valuation it is enjoying. When there is any stress, the PE can contract significantly. Therefore, I would suggest sell on Asian Paints and move on to ITC. A lot of activities happening in ITC in terms of, focused attention on other FMCG. So I firmly believe that there is a possibility of re-rating for ITC valuation in the short term itself. I would suggest to hold on Aurobindo. It is again like Alchemy he holds. This is also one of the cheaply valued pharma stocks. Therefore, I would suggest hold. And similarly, I would suggest hold on Axis Bank. Surprisingly, Axis Bank is trading at around 3 times adjusted book value. And whereas, recently listed RBL Bank also trades around 3 times adjusted book value. Whereas Axis Bank is 14 times bigger than RBL Bank in terms of the business. So therefore, I firmly believe that, bank like Axis Bank deserves a lot of re-rating. At least to 4 times book value, and hence I would suggest even buy if his exposure is quite small in Axis Bank.
All right, those are the recommendations coming in on these three stocks. Sell Asian Paints and really book your profits over there because the stock has actually ran up since the last couple of weeks very significantly, and you can replace that with ITC. But you may hold on to Aurobindo Pharma and Axis Bank. But let's get in a check on the last three stocks in his portfolio. The first one being Bata India, which he's bought in at 440 rupees. Once again, he's making some good money over there. BEML, which he's bought at 1,022 rupees, and currently he's more or less at the money. And lastly, it's BEL, purchased at 1,087 rupees. Once again, he's making some 200 odd rupees on that stock. So it's a good buy candidate, a buy over there. Mr. Chokkalingam, what would you advise him on these three stocks?
I would suggest sell on Bata India. It's trading at around 31p on 1 year forward earning. The kind of growth it's showing off late is not comparable to what it used to show in the distant past. And I would suggest shifting the money to Indigo. Indigo has corrected more than 35% from the peak. And I am of view that the aviation sector would again do very well in the market. As I mentioned earlier, oil price on year-on-year basis is down more than 50%. Again, in the short term also, it has corrected a lot from $52 to around $45, which would be definitely positive for Interglobe Aviation. More interestingly, for the 16th month in a row, the airline traffic in India is growing in a strong double digit. For the month of July, it has grown at 26%. So Interglobe, with a market share of over 40% and leadership quality, I am sure would be in a better position to grow, and therefore I firmly believe that it can easily achieve a target price of around 1,000 rupees in the short to medium term itself. I would suggest sell on BEML, for two reasons. Valuation is stretched at around 19p on 1 year forward earning, and two, if you look at its performance in the last 4-5 years, it always lacked the consistency in the performance. There are times it it slips into even losses, and therefore I would suggest a sell and move on to MOIL. But unfortunately, MOIL moved up substantially on Friday, so therefore I would suggest a shift whenever MOIL corrects even marginally. And the third stock is BEL, that is Bharat Electronics. I would suggest hold on to Bharat Electronics. After the bonus share, it has marginally corrected, and in terms of valuation also is quite attractive, 18p on 1 year forward earning. And secondly, it has got a lot of cash and zero debt company, and there is a lot of activity on the defense outlay also. So that also would be positive for BEL. So therefore, I would suggest hold on to the stock.
All right, that's the advice coming in on the entire portfolio. Just going to have a quick run up. Advanced Enzymes, exit that stock. Put your money instead into LG Balakrishna. Ajanta Pharma is an exit as well. Lupin is a better stock to hold, 1930 target. Alchem Labs, stay invested here in this stock for a target price of 1700. Switch to MRF from Amara Raja for 41,000 as the target price. Apollo Hospitals, well, exit that stock. Put your money in Emphasis for a target of 650. Stay invested in Apollo Tyres for a target price of 210. Hold on to ITC instead of an Asian Paint, so make the switch for a target of 300 rupees. Aurobindo Pharma is a good stock to have. Stay put, target 850. Axis Bank, stay invested here for a target of 650. Then moving on, Bata India is an exit. Indigo instead is a buy recommendation for a target price of 1,000. BEML, choose to get out of this counter. Instead, Barmer Lorry is a preferred pick according to Mr. Chokkalingam for a target of 350. And finally, BEL, stay invested for 1,400 rupees. And do remember that this is only a model portfolio that's been recommended. Please consult your individual investment advisor before taking any investment decisions. That said, we'll slip into a quick break right here on the show. Stay with us for some top stock ideas.
Welcome back. You're still tuned into Buy Now, Sell Now.
Okay, let's keep it then with the markets and talk a little bit about what the outlook is going forward. It's been a pretty phenomenal week, 8,800, so no complaints whatsoever. We piled on a good 237 points. On the Sensex too, it was a pretty strong week. The broader markets had a fair run as well. So let's get in calls then as to what one should look out by way of levels. Swati, wanted to understand from you, from this pit stop, what's the next now?
See, overall the Nifty setup has been very strong. Nifty, we have seen that on every dips we are getting a buying as such from 85, 8600 was the good level. Once it's managed was the support level. 8740 was the strong resistance level that we have witnessed from the last few weeks. But this week, last week was a very great week on the Nifty side as such. We have got a breakout. We have just touched the feet of 8800 and we maintained a positive closing at a very higher levels, which indicates that there is overall strength is there. Participation is coming from all over the sectors. Right now the mid cap is the only one which is not participating, but definitely the larger caps are doing very well as of now. I believe the Nifty has a potential to reach up to 8900 or above that 9000 odd levels in the coming few months as such. Whereas on the downside 8740 will act as the immediate support level. So those who are having any long positions on the Nifty, better one should keep the stop loss of 8740 and carry your long positions for immediate target of 8900 and 900 onwards for the in the coming month as such.
All right, those are some technical levels that you can watch out for the markets. But Mr. Chokkalingam, coming on the Nifty, we did see a very strong move come in this week, 2.76% higher over there, and we were firmly above the 8800 mark. So what are you making of this move?
Yeah, I've been saying for last few months that Nifty would cross 9,300 and Sensex would cross 30,000 by end of the current calendar year, and thereby they would create a new lifetime high. The conviction comes from the fact that, in my view, only two economies in the world, namely US and India, they are not showing any signs of deflationary trend, whereas many other major economies are showing strong signs of deflationary trend even now. So, and apart from that, all of us know the kind of the monsoon and its impact on expected agricultural growth, and various other factors all conducive for the Indian economy to improve its growth going forward, and thereby even the corporate earnings would improve. So hence I continue to believe that we are set for lifetime record level of benchmark indices before December 31st, 2016.
Okay, that's the view coming in on the fundamentals and technicals. Time to nail it down to top ideas. And Swati, let's start off with you from a technical viewpoint. Which are the stocks that you like?
Yeah, today I have two buy calls with me. My first buy call is on the Reliance Infra. Why I'm giving this particular buy call as such, we have seen on the technical charts, this particular counter is trading, taking a strong support of its 50 days moving average, which comes to at around 580 odd levels, and whenever it touches that average level, we are seeing a spike up and almost it's trading near its 52-week high. Friday we have seen a very good momentum into this particular counter. Initially in the last week it was just hovering at the resistance of 608, 609 odd level, but somehow at the end of the period it has just given a breakout with a good volumes. On the volume also even we have seen that it has given a breakout. Every day we are getting a volume of at around 25 to 30 lakhs, but on the Friday we have seen the volume breakouts. The volume was at around more than 45 lakhs. So it just gives a signal that this particular counter will just make a new 52-week high as such, which will come to at around 650, 660 odd levels. So at the current level, I'm giving a buy call on the Reliance Infra for a target of a 660 with a stop loss of a 580. My second buy call is on a BEML. Why am I just giving buy call as such? On a weekly chart, it has just giving a inverse head and shoulder back breakout on the line chart. The breakout was at around 1050, 1055 odd levels. Friday, it has just maintained a closing about 1070 odd levels with the good volumes. So one should buy the BEML at the current levels, maintain the strict stop loss of 1040 on a downside. I believe it has a potential to reach up to 1160, 1180 on the upside.
All right, two buy calls coming in, BEML and Reliance Infra. But let's get in Mr. Chokkalingam then to talk about someone who has more of a long-term investment horizon. What would you advise him?
Yeah, as I mentioned, the first idea is Interglobe, Indigo. Strong balance sheet and net cash company. Therefore, for an airline company, it is quite convenient to expand the capacity by acquiring new airplanes using by leveraging the balance sheet, which is already very strong. And it has got 40% market share, and the stock also corrected nearly 40% in the last couple of months. And the service economy is still growing very strong. If you remember, a couple of days back, the GDP growth number has come. All the segments of service sectors are growing anywhere from 8 to 9%. So that is also conducive for airline company. And in the long term, it can also attract FDI. because of its leadership quality and strong balance sheet. This would be on the forefront to attract possibly FDI into the company. So therefore, I see opportunity for both the short term as well as in the long term for making a good return in this stock. The second idea is LTI, Larsen and Toubro Infotech. Ever since got listed, the stock has been on the downside. Very surprising to note that the stock is trading at less than 10 PE on 1 year forward earning. If you see most IT stocks with a turnover of 2,000 to 5,000 crore, they are all trading anywhere around 13 to 16 times, some of them even 18, 19 times, whereas this is trading at less than 10 times on 1 year forward earning. Like any other IT company, this also got a strong balance sheet and net cash company. And also, very interestingly, this company's exposure to Europe is limited. It has got only 17% exposure to entire Eurozone. So that also gives you a lot of cushion. And its exposure to US is around 69%. And as I mentioned earlier, US economy is showing strong signs of growth. And considering all these facts, I would suggest buy on LT Infotech. And lastly, coming from L&T group, it is quite surprising that the valuation is so low for this stock, and which would be corrected once the IT stocks start looking up in the stock market.
Okay, thanks very much, Mr. Chokkalingam, for giving us those wealth creation picks, as well as Swati for joining in and giving us a flavor of what looks good on the charts. And on that note, then, we'd like to thank you both for joining in on the show, and thanks to all of our viewers for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.